Deep Dive with David Stendahl, where we trade without ego, no emotion, no greed, and no opinion. Before we begin tonight's video blog, please read over our trading disclaimer and remember to trade smart and accept the reality that trading futures is risky. This presentation does not provide buy-sell recommendations, and our information is strictly provided for educational purposes only. As always, trade at your own risk and analysis. Hey there, it's David Stendahl with tonight's Deep Dive. It is May 23rd, 2019. Thought I'd take a look at Australian dollar, the ETF being FXA. Now, we've got the trends all pointed to the downside, short, intermediate, and long term. We got the technical rating pointed to the downside, and the seasonal tendencies are at the tail end, but they're also pointed to the downside. And yet, our systems are actually long the market on a short-term basis, and I'll show you why. But I do want to at least point out that there's a lot of negativity from a technical perspective for the Australian dollar, but there is a potential for a little bit of a short-term bounce to the market. So let's go ahead and take a look at things and get an idea as to what's taking place. First, we'll take a look at the fact that Australian dollar is here listed on the top 10 list, and so always a good spot to come to this particular page for markets that you might have some interest in trading, just because of the projection as to what it could be showing. So here's Australian dollar. If we actually take a look at the Australian dollar, I know the image is a little scrunched here, but it is definitely in a high accuracy phase. But you can also see that in the near term, we're going to be coming to a base. This is a 10-year chart. And once we get to this base, which will be in late May, then we typically see with the Australian dollar a bias to the upside. So sideways to up to down into the phase that we're in right now, and then waves to the upside. So the low is, at least on the seasonal chart, is beginning to set in. But that's not necessarily helping us right now, but there are other things that we can look at. So if we actually take a look at the market, here is the Australian dollar here. Daily bars. You can see the downtrend that's been underway. You can see just a slight consolidation, nothing that's showing up with any of our indicators. I'm just simply pointing out that it's been moving sideways, and a lot of this is due in part to this very strong support to the market. This 50 represents very, very strong support, so the higher the number, the better. Got a 24 over here and a 37. And when we hit those types of cases, especially with the 50, that's something that's very, very strong. So what's been happening is the market has come down, and we have been finding some very key support at this level. We also have a little bit of a bias on daily bars where the market is showing higher lows. So here's a low in the market, a lower low in the market. Here's a low in the indicator, but a higher low in the indicator. So there's a divergence that's underway here. So there's enough of an indication that there's a possibility that we actually might legitimately find some support here, and this little consolidation towards the tail end of this month would then lead to that seasonal bias, which is still to the negative right now, but the seasonal bias will start to pick up. So I'm pointing this out to you. Now the systems themselves, they are actually long the market, where we had a number of systems intraday, not end of day, because we're still short one system that's been short for quite some time, and another one that liquidated here today, just a recent liquidation, and we had three systems that went long the market. Now these are intraday systems, so a 60-minute, 120-minute, a 90-minute bar. They all triggered today at slightly different prices, and it's what's causing causing me to think that based on this support, that the market actually might be a little more biased to the upside, at least on a short-term basis, assuming that we can hold that particular support. The other thing I'm going to point out, and this is more of a comparison between the different currency markets. I'll just point this out, that this blue line right through here represents the volatility specifically for the Australian dollar. I'll point all these out. Got the US dollar here in this light blue. We got the purple, which represents the euro. Green is Canadian dollar. This orange kind of yellow color is Japanese yen, and over here the very volatile is the British pound. And what you'll see here is this is a volatility look back for the last 3 years, not forever and ever, just the last 3 years. And you'll see, and I'll use the euro here as, or the Canadian dollar as the example. This diamond, kind of hard to see here, but this gray diamond represents where we are right now relative to volatility over the last 3 years. Are we at the high end of the volatility, or are we at the low end of the volatility, or are we in the mid-range? And so the mid-range are these dots, the dots, the individual colored dots for the bar. These lines here represent standard deviations, and then the highs and the lows for the last 3 years. So pointing this out because the euro and the dollar and the Canadian dollar are all very close to their lows, along with the British pound. It's the Australian dollar and the British pound, but the Australian dollar, which is above its lower standard deviation. With the exception of the British pound, all the other ones are at the low end of that. So I think there's going to be an increase in volatility. I think that we're going to see this show its face here with the Australian dollar, that either A, we're going to see the other markets catch up to the Australian dollar, or the Australian dollar is going to come down and be very, very quiet. So this then comes back to the market. Here's the trend to the downside. We've just entered, just in the last 5 bars, a little sideways consolidation. Could this consolidation and the market quiet down and the kind of set itself up nicely for the next big explosive move for the remainder of the year? When we take a look at those seasonal charts, point to the upside, are we going to start to see that the market kind of quiet down and then have the explosion? Or are we going to see the other currency markets really start to pick up? Either way, I think that what we're going to see is an opportunity here for the upside inside of Australian dollar, assuming we can stay above this particular level, which is 68.96. That's what this level is right through here, and we're essentially on that at the present time. So I expect volatility to increase across the board with the currency markets, and we'll see as to whether or not the Australian dollar maintains itself and the other markets come to it, or if things are going to quiet down, not for the other markets, but quiet down for the Australian dollar, and perhaps even for that of the British pound. But I think that as long as we stay above this level, we could see the other markets start to pick up, which is what I really believe, and then we could see some type of a bounce in the market here for Australian dollar and put ourselves in a position that we can take advantage of for what's taking place. So this volatility chart, you can easily find this one on the website. I won't go through all the particulars, but you just come down to volatility analysis, find the market, and then you can always look at sector volatility as well. But it's a good way to get a feel for if we're at low volatility, as we are for for the U.S. dollar, the euro, Canadian, and Japanese yen. If you trade those markets as well, expect that we're going to start to see a little more volatility and probably catch up to that of the Australian and obviously with the British pound. Where we stand with this scale here really comes back down to something that you can look at up here as far as where we stand with just the volatility across over time. So you can read through this and get a better feel for what's taking place. But I find this chart to be very, very helpful when some of the markets that are close to in correlation to that Australian dollar, when they're all low and the Australian's not low, what's taking place. And so you're always looking for what doesn't exist. So with that being the case, I expect that the systems will do well. Watch the systems, and we'll see as to whether or not this new interest on the long side is going to hold here as long as we stay above that support level. Otherwise, they will probably reverse course very quickly and will resort back to the short position. But expect that support to actually hold, and we'll go from there. Thanks very much. Bye-bye.